Welcome back. It is Tuesday, which means obviously only two things: tacos for number one and Vetted VA live here. So joined by three experts as usual. I got Tina Brewman with me here on the top. So tacos and brew, how much better can that get? We got Jerry Avila and Gary Foote, and we are talking about a really cool and important topic tonight, which is technology related around the buying and selling process. We have a lot of technologies on the mortgage side. Realtors have a lot of cool technologies, but depending on what age you are, how technologically savvy you are, you may or may not like those things. You may or may not utilize those tools. So we're going to go through it. We're going to talk about some really important things you need to be on the lookout for technologically, some things that can go horribly awry in the mortgage and home buying process, and give you some tips to avoid that fun stuff. But Gary, you're our only realtor in the bunch here tonight, working on the real estate side. Why don't you walk us through kind of the big one? Everyone who's looking at buying a home, generally before they reach out to a realtor, they're going to go out to the portals. They're going to look at Zillow. They're going to look at Redfin. And then they meet with the realtor, and the realtor says, "Hey, I'll set you up on a drip." And they're like, I got it. Why don't you walk us through what that looks like and the differences between those two?
Awesome. Yeah. So that's a great question and great point. So Zillow, Trulia, all those sites, they're what we call aggregates, and they get all their information from various MLSs where they have a syndication link. That's a lot of fancy words just to say that they get information fed to them by what people in the real estate industry input through various multiple listing services. So a couple things that I commonly see. One thing is all those sites that you listed, oftentimes they are pretty user friendly, which is great. Like that makes it easy to navigate, but they're lead generators. That's the name of the game. They're not real estate focused, they're lead generation focused. So a lot of the data is going to be off. One of the most common calls that I get are things that say pre-foreclosure on Zillow in particular. Say, hey, this isn't pre-foreclosure, I want to buy it. It's like, well, it's not for sale. Well, it says it's on pre-foreclosure, but that just means that a notice of default has been recorded against this property, and it may or may not come to sale. And oftentimes it typically doesn't go for sale. So that's what's important to understand, is that you are getting some information, but it's not the most up to date, nor is it necessarily accurate. And that's the main difference between the consumer side of things versus the professional side. On the professional side, we're only concerned about real estate information. We're not looking towards the lead generation on those drips. It's just what house is available, where's it at, what's the information that we have on that house. So let's provide that to you. But there's no need to try to generate more business from that because we're already in a relationship with those clients that we're setting up on those drip campaigns.
And the funny thing is, it is, to us in the industry, it's obvious that those are, if you put your information in there, they're not connecting you with the listing agent. But I have clients all the time that say, it was weird, I put in my information, I thought I was connecting with the agent that had the house listed, and they had this different agent call me. And you're like, well, no, that is literally the model. Agents pay subscription membership to get connected with people who are interested in homes in their area that they would like to sell. Is that a terrible thing? Is it the worst thing in the world? Probably not, but most of us want to be in control of picking our professionals versus getting connected with someone through filling out a lead form. I don't know what you guys think about this, but one of the things I really like about both of those portals is not the portal itself, is looking at the data that they have. And they're both, and I meant to pull up the little subdomains they have, because they both have their analytics department where they run a lot of really cool data, because they are aggregating this information all across the country. I always tell clients, be very, very careful when you're watching magazine, news, TV headlines, and they say, home prices did this, mortgage rates did that. It's national data. And it's really important for us to be looking. I mean, do you care that homes in the San Francisco Bay Area are down 5% if you're buying in the Northeast and Boston's up 10%? Probably don't care. And you don't really care what the national numbers. You're not buying a national average home. You are buying a specific home in a specific market, and you need to know what's going on in that market. So to me, both of those portals have really good data, and it's free. We can get that data, sort of insider stuff that we pay for on the mortgage and real estate side, but for a consumer, it's some of the best free data that you can get. Speaking of their data, Tina, tell us from your perspective, and clients, either when they're reaching out and wanting to refinance and they say, I know what my home's worth, Zillow told me. How good is that technology for us, and how much do you as a loan officer depend on that?
I do not depend upon that. And part of that goes back to what Gary was saying, is that some of this information is a little bit zhuzhed up because they're using it as a way to bait you into more engagement with their site. So there might be that it's within a range, but it's absolutely not some reliable information. I will say that I think that Redfin can be more reliable, but you again have to know that the information that's being provided to you, especially if they know that you're a potential home seller, is to try to inflate that for you because they don't have any understanding of the true condition of your home or the nuance in comparables or things like that. As a loan officer, when I get started with any loan, I pull what's called a property profile report from 3 different sources. I myself, as a loan officer, very beginning to start with, because I would never trust any one source with information. So I use that triangulation method where I take 3 different sources, even myself as a loan officer, for a property profile, in order for me to establish some confidence in what I believe the fair market value for that house is. And the same could be true for a consumer. You might not be best served by going to just one website and using that as the holy grail of information. You might be better served by going to 3 or 4 different websites, because then you have some comparisons to make. But the best information is going to be from a professional that really gets it the way that I get it.
And one of the things that I always like to tell people, I think that my neighborhood is a very good example, in that in Southern California, in many suburban areas, like Gary, you're in LA and Tennessee, Tina, you're here in Ventura, and Jerry, you in Phoenix, so also fairly suburban.
Fairly, yeah.
So you get to a lot of these areas, and a builder comes through and they build a tract of homes, and there's 300 of them, there's 500 of them, there's 1,000 of them. That data can be pretty darn good because those homes are selling fairly regularly. There's an exact model match, but what will throw it off is when things are weird. So my home was built in the 70s, and in Huntington Beach, California, most homes are built in half square mile blocks, and they were built by one builder. So we have all those wonderful, clean, easy comps. In mine, we have 4 builders in one of those half square mile blocks. One's really big and was built in the 80s. Ours is a little smaller, built in the 70s. And there's 2 others that were built 5 years earlier and smaller still. So whenever I look at Zillow or Redfin for mine, it's never right, because all of the smaller, slightly older homes pull it down. Mm-hmm. And I can only imagine the people in the big homes that were built in 1989, it's probably telling them crazy numbers on their value. So a lot of it just comes down to how homogenous is your area, how many comps are available. If you're out in the woods or farmland somewhere, good luck. It's going to be almost worthless. It's just how homogenous that data looks like. We collaboratively work on putting these outlines together, and I don't know who put this one in here. I love it. I've never used this version of it, but I've used the Google Maps version of it. So we want to talk about mapping tools. So if you're looking at buying a home and you say, well, I know how to get there, what do I need a map for? But Waze apparently has something called Future Commute. Did one of you guys put this in, or did we get this? Jerry, you want to tell us about it?
So Waze does have so in essence, one of its functions that it's just going to give you the routine of what the drive is from to and from work type of thing, what the traffic flow looks like going in and to and from your home on a regular basis, just based off of the accumulation of data that they've collected based off of other drivers that are also on Waze. And so it actually provides you with a really good idea of what time is rush hour, when are you going to expect to see a little bit more flow of traffic? When is it going to, when do you see it really slow down or pull back? Times of the year where that actually impacts. So all that stuff actually comes in handy. I know I utilize it when I'm doing trips. So for a lot of the circumstances that I run into is I'll see trends of okay, if it's on a particular holiday or something and you're trying to travel the day of, you're likely going to spend about an hour longer on the road than you are if you were to go the day prior and things of that sort. So like those are like the cool patterns that you get to see using Waze and in order to kind of travel back and forth to these properties.
I forgot to mention, guys, at the top of the show here, our primary purpose here, we're always going to cover a topic. Tonight, we're covering technology. We want to go through that for you. But any questions you have, mortgage and real estate related, throw them up in the comments. We're here to answer those. And in that spirit, we actually have a good question here. Someone says, just purchased recently. Is it normal for my lender to not have given me the online portal to make my mortgage payment? Payment is due May 1, so probably closed here in the last 15, 20 days. Jerry, how long does it normally take once a loan closes to get that welcome package, to get a portal link and invite?
Yeah, so typically from a close of escrow, you're looking at about, it just depends on how efficient and how quickly the closing departments are working with that particular lender and with how clean the file came back to send back over, right? So it could be, I would say anywhere on average about 7 to 14 days. I don't see it take much longer. And when they do take longer, typically the lender who closed that loan will likely have to have given you also essentially a sheet with your closing package that tells you if you don't receive a mortgage statement by the 1st, you have to send your payment here. And that's how many of the per se correspondent lenders will approach it in the event that they can't sell the loan right away over to that lender.
And because that set of loan documents is 9,000 pages, no one ever knows it's in there. So the way we work in the business now, I'm an old man. I started this in the 90s, and almost everyone went to title or went to the escrow company. They sat down and someone spent an hour and a half going through everything with me, explaining what it is. Now a mobile notary shows up at your house. You're going to sign in 20 minutes, and they're probably not going to point out what that funky document that doesn't need a signature is. So they're always in there. I don't know about you guys. When we have a closing, I send the people the estimated settlement statement, those temporary payment coupons, remind them what they are, and show them confirms, hey, this is the payment that we talked about, but that they have it there as well. But going back, you guys, to that commute question, just go around the horn here. What percentage of your buyers, when they're moving to a new area, somewhere they're not comfortable or used to living, how many of them actually drive that and know what the commute is going to look like? Tina, do most of yours, do some of yours do it?
It depends for me because I live in a fairly smaller town in California. So a lot of people that move here are moving here because they work from home, work independently, or they travel periodically for work because it's a little high dollar area. So the work patterns for people here might be a little different in my immediate area. In other areas, like I have people moving to another town a little 20, 40 minutes away. I think that they don't. And it's interesting because where I live, Ventura County, Santa Barbara County, our traffic patterns change because of a lot of road construction right now. And that's very common in a lot of areas of California, Arizona, and just the West Coast, is that there's a lot of reconfiguration of our freeways. So if you are taking freeways, sometimes those can just be longer commutes than normal. And you just need to typically adjust your leave time and start time is what I see. Like we have a lot of people that drive back and forth from Ventura County to Santa Barbara County. You just need to start your day earlier if you want to avoid the traffic.
I thought for sure you were going to say that Ventura and San Bernardino County or Santa Barbara County, that it varies with the surf, because we get that. We get that here in Huntington. We get it all throughout Orange County. Any of the beach towns, you're like, oh, my commute's fine. You're like, no. It's terrible weather, but the surf's up. So there's 9 million people at the beach.
Yeah.
There's that, or there's like people, especially coming through Santa Barbara because it's the 101. And so it's a north-south corridor. So starting in like the end of May, Memorial Day weekend, Thursday, Friday, Saturday, you see all the trailers, the horse trailers, the camper trailers, the boats, the whatever, going back up and down mixed with the normal traffic. So you have to accommodate that. But we live in paradise. So it's like, right, that's what you're going to have to deal with. They have traffic like that in Atlanta, and it's not such nice weather there all the time.
Oh God, just remind me of the Ventura County Fair too. Anytime you have the Ventura County Fair, that 101 right there, just
Yep. So I think it just depends. It's going to be to me, traffic and that kind of thing it has to fit within your lifestyle, right? Why are you moving where you're moving? Are you able to accommodate that part of that reality? But that should be one of those considerations that Gary is talking about as a super great real estate agent, which is what does your commute look like? Those finer points in selling a house. That's not so much my conversation necessarily as the lender, but I'm sure it's part of Gary's.
Absolutely. And I say never underestimate the commute if you're moving to an area where that commute is changing. If you're buying 5 blocks away, you already know what everything looks like. But for us in Southern California, we have a lot of people that move inland so they can chase affordability. Oh, it'll be fine. It's only 45 minutes. Like, no, it's a 45-minute drive at midnight at 5 p.m. It is a 2-hour 45-minute drive. During COVID, I actually had a client that moved from Los Angeles to Victorville. And they're like, no, we've driven it. It's a little over an hour. I'm tough. I can do it. I listen to podcasts. I'm going to be good. 9 months into that house, they got lucky because it was during COVID. That house went up a bunch in value. They put the for sale sign in within 9 months and they tapped out and they went back to LA County. So it's important, but some of those tools, Google Maps will also allow you to map out a route and say, leave when, leave Monday at 7 a.m., leave Wednesday at 7 a.m. and gives you nice ranges on that. Gary, why don't you talk to us a little bit about some of the online tools? Someone's considering living in an area. We all think we have a feel for what an area is like, but do we really know how good the schools are, how much crime's going on? One of those things, if you're here in California, you've got Megan's Law. We have a database for looking up all sorts of things you may or may not want to know about your house or the neighborhood that you are living in. But what does that look like, Gary? What are some of the tools that your clients are technologically relying on to learn a little bit more about a neighborhood before they move there?
Sure. I mean, you really kind of hit the nail on the head on a few of the most important ones. So, Megan Law is our sex offender database. And so we're looking at that. If you decide to hop in there, though, I always have the conversation with my clients in advance of make sure that you drill down, because I'm not saying things one way or another, but there's some offenses and where people are recorded in Megan's Law. Someone made a pretty poor decision versus someone actually being somebody that you wouldn't want to be neighbors with in your neighborhood. So it's important to be able to drill down, because I've had some people like, oh my gosh, like there's people on Megan's Law database, like in everywhere I'm looking right now. And it's like, well, make sure that you're looking at like, what was the offense? Did they do something you're like, oh yeah, that was really stupid. You probably shouldn't have done that. Like I've seen it before where it was an 18-year-old young man dating a 17-year-old young woman. The parents got upset, they reported that person, and they ended up in Megan's Law's database. So it's like, well, that's a lot different than someone that was, looking to abuse children, for example. So my encouragement is make sure that you're fully using the resources there to get all the accurate data. So that's one point. Great schools is another one, making sure that you're getting in there. Now, great schools is a good place to start, but I always recommend, you can go in to great schools, you can see what great schools thinks are your school districts, but then go directly to the source after that. Almost all school districts will have a map on their school district website. You can put in your address and it will say, hey, this is the boundaries for that particular school, because there can be discrepancy between great schools and the actual school districts. The school districts, they're the ones that know what their boundaries are. So make sure that you're going to the source as far as that goes. And the other thing that I really recommend that people go to, and especially if you're in the rental market, I know that we primarily work with people that are looking to purchase or to sell homes, but there's a lot of issues going on right now with fraud when it comes both to sales as well as to rentals. And so I always recommend, before any dollar goes to anyone, that you go to the county website, you put in the address, and you see who's the owner of record for this property. Because you'll see this on Facebook Marketplace, Craigslist, all these different places. If a property seems to be too good to be true, oftentimes it's a scam, and it's not. It's not true. And so, I always recommend that. Or if you have someone trusted in your life that is a real estate professional or a loan professional, we have title people that we can go to if we need to say, hey, I'm getting a little uncomfortable with the situation for this person. Can we look at the title a little bit closer and make sure that this person really is who they say that it is before there's any type of money that's transferred. So those are probably the three, top tech tools that I would be looking at to make sure that you're keeping your family safe, you're keeping yourself safe, and you're keeping your wallet safe.
I like it. It's funny, kind of lost in all of the headlines recently on the squatters is that a lot of the people are the actual squatters did not move in. Someone else got possession of the property and leased it to them under false pretenses. They're a victim also. They probably should just go, hey, I'm sorry, we both got screwed here and move along. But you're seeing probably 1 out of 3 of those cases. It's not the actual squatter posted up in the property. It's someone that leased a squatter, leased it to them, and now they're saying they don't want to leave.
Yeah.
Jerry, I want you to talk about one of loan officers' favorite things, which is online mortgage calculators. Are these awesome? Can a buyer go in and know exactly what their payment is going to be and what they qualify for?
They'll never know exactly what they're going to be paying, but they can get a general idea. They're okay. They're mainly there to help you understand what your principal and interest payment's supposed to be, but it doesn't go through the qualification process. It doesn't go through any of that. So you can feel like, oh yeah, I could totally afford a $3,000 mortgage payment, but in all actuality, based off of what my qualifications look like, I can't afford anything over $2,500. Right. And so it makes a big disparaging number really obvious to those consumers who are like, oh, well, I want to live in this area. And now they're like, I'm going to have to live over here. And I don't like that area. And so those are things that I would say that once you start talking to a mortgage professional, like you can use the online calculator for giggles, basically is what I say. But when you want to get serious numbers, get fine-tuned information, then obviously you're going to want to talk to a loan officer, get them to go ahead and actually run a scenario, show you the actual calculation. Or it could be that we may have something on our own portals of our own websites that have access to, that day's rates based off of X, Y, and Z, in essence, like what the rates would be based off of these qualifications. And so once you have that, at least you have kind of just a semblance of what that looks like, and ultimately gives you some guidance. But again, I would always lean on talk to a professional, have them give you the breakdown, because we will be able to actually use our systems to do that. If not, I tell everyone there's that what's the name of that calculator? It's our mortgage calculator that you can use, that you can download. It's the QP 3X calculator. I use that thing all the time. I can break down somebody's income and find out what their maximum payment is, and then from there reverse math it to do the mortgage, or what the mortgage is going to be based off of X rate. And so it'll give them the full breakdown of what that would look like for a 30-year term and all that good stuff. So it really just depends on, one, how much of a nerd are you? Because I'll be honest, like I'll grab my calculator and I'll just ram that thing through real quick. But if you're not, if you're just not sure of what those numbers look like, then you just talk to a professional. It's going to always be your best bet.
And
to me, it's like, you know what? Those things help you do the math, but they don't tell you what math to apply. Right? They tell you how to do the math, but they don't tell you what math applies to you, because you don't know your rate. You don't know. And rate is such a multiplier in the transaction that if you're off by 0.5% in the rate that you're applying to that calculator, which you don't know what rate it is until you talk to a mortgage professional. So it can help you do the math, but it doesn't tell you what your math is.
Okay.
And it's important. Oh, I was gonna say it's important to keep in mind too. It's similar to the first question that you asked. Like a lot of those mortgage calculators, they're designed to make connection with lead generation. Like it's really not designed to give you accurate information. So again, it's be cautious about that. And of course, everybody wants to be able to know their numbers. That's being an informed consumer. So I'm sure our audience is probably looking at calculators because we work with a really well-informed audience at Veta VA. But keep that in mind. And they're trying to look at things. A lot of them, they're defaulting to 20% down. defaulting to 20% down, that's going to be a huge difference than using your VA entitlement so that you can put 0% down, for example. Like Tina said, you're not going to have the right interest rate in there. And I'm sure you all have experienced this before, but a lot of times we're met with frustration when someone calls and says, well, I went to xyz.com and it says this is going to be my payment, but you're saying my payment's going to be this. And so it's a matter of saying, okay, like, let's really make sure that we're getting these dialed in. I know 3 of y'all are in California. Like, one of the biggest things too is, if California properties, when are they assessed? Time of sale.
Yeah.
What do the mortgage calculators take for their property taxes? Current.
Oh.
That can be a huge difference in your monthly payment. So all those things, folks like us factor that in. So it is important to get maybe a little bit of a starting point, but just know, okay, this isn't designed to really give me numbers. This is designed more to give my numbers those special 10 numbers to somebody to call me. That's what it's designed for.
And, Jerry said something really important, generally pretty accurate for principal and interest, assuming you have the right interest rate. Gary made a really good point that it's hard to know what those property taxes are if you're in California, if you're in some of the other states, and it's tied into the data. It can say, hey, you're looking at this property, here's the actual property taxes. Insurance is a huge thing right now. It used to be pretty simple to calculate. For us in California, if you're in a high fire hazard area, it could be $400 or $500 a month, where we'd used to estimate 100%. If you're $100, if you're in Florida, starts at $300 a month and can go up to $1,000. I saw a number, Insurify put out a number that says the average annual premium for homeowners insurance in Florida is $11,500. And if you're in another part of the country, you're like, that's mind-boggling. I can't even wrap my mind around that. So it varies so much. It's very hard for the calculators to do a very good and accurate job of that. What I was going to say is, as a mortgage originator, one of the least favorite things is someone saying, well, I saw this interest rate online. Why can't you do this interest rate? Because what they're doing is they're looking at bank rate or something similar, which is a tool where the biggest liar gets to go at the top of the list and they get the most inquiries. And I actually know someone that makes a lot of money, owns a very big call center operation. That's exactly what they do. They try and find 50 reasons why you don't qualify for that wonderful, spectacular rate, but you called in. So I always tell people, because everyone wants to know, well, I don't want to have to call you, or what if I want to look on a weekend of what interest rates are? There's 2 tools out there that are fairly accurate, but rely on your mortgage professional. But Mortgage News Daily has a nice chart, and it allows you to plug in information. Say, I have a 680 credit score, and I'm putting 10% down, and it's going to get it more accurate. Optimal Blue has the Optimal Blue Mortgage Market Index, and also it allows you to tweak those numbers a little bit, get something more accurate. But rely on your mortgage professional. I'm mad at myself for not having those 2 websites on the list, because they are good tools for you as a buyer if you're out there wanting to educate yourself and not bother a mortgage professional or not reach out to a mortgage professional yet. For all of us, all 4 of us do mortgages for a living. So with that means that we have a portal of some sort. Tina, why don't you explain to those that are watching and maybe have never been pre-approved, what is a portal? What's its purpose? What do they expect after they've talked to you and you send them a portal invitation?
So what typically happens for me, I like to have a conversation before you apply, just so that we have an understanding of what I can expect and you get an understanding of what the process looks like. Once we do have that conversation, then I'll send you out a link to a custom portal that's secure and private to yourself. So for me, I use a system called Arrive, and it's a place where you're going to put in your private information, your name, your social security number, your address, your work history, your employment, all of those things. You're also going to answer some questions that are quite important that I cannot answer on your behalf. You need to answer those. So they are things like, have you been a co-signer on a loan, or do you own other properties, things like that. So once you answer those questions, you're going to then be directed to upload some documents. Typically it's taxes, bank statements, a DD 214 if this is a veteran or somebody with some entitlement, or a COE, some documents like that. You'll securely upload them to this same portal. That's a portal that I go into on the back end. I pull credit. I use it to structure your loan. I use it oftentimes to communicate your loan directly to the underwriting lender, by automating an upload. So it helps us with a more secure process. But I will say this, if people are not comfortable with this, if they are not technologically savvy, there is no reason why we can't handle that same process in a lot of different ways. And that's why I like to have that conversation up front, because if you're like, hey, look, I don't have a scanner, I have to do this on my phone, I would say, hey, you know what? Let's get on a Zoom. Let's have a conversation first, and then I'll handle it differently. And I can take over that data entry part of it, and we can have a conversation through it. So people should not be intimidated by what may be an initial request for engagement with technology in their loan. They should know that it's just a more secure way that we do business, but there are alternatives that we can work around. So it should not preclude somebody from getting started or being scared off, because that sometimes is intimidating for people, and it shouldn't be, because we can handle it a lot of different ways to accommodate wherever you are.
I think that's a good transition to a couple things here. First off, I'm typical buyer here. You just scared me. You talked about important things like my tax returns and my bank accounts. So if I'm going to share them with you, I can go ahead and redact all of my important information and black it out before I send it to you, right?
No, sir. Please. I need original documents. And if it's easier, we can communicate directly with your tax preparer and they can send me a complete copy, because I need all pages, all schedules, nothing redacted. Unfortunately, this does feel a little invasive, and I can understand that. However, I do explain to borrowers, and I explained this to a borrower today, where we're having to trace gift funds that are gifted from a grandma that's out of the country. I am not looking into her business per se. Really, what mortgages are looking for is to prevent money laundering, to be honest with you. So a lot of our process, our security, our whatever in looking at documents, it's not to see the nuance of your taxes. It's to make sure that you're not reporting, you're hiding money, you're not coming across in a legitimate fashion to an underwriter that needs to make a risk-based decision off of your file. That's all we're looking at. There's no judgment in anything. There's a million ways that people do taxes for a whole lot of reasons. And I tell my borrowers, some people are self-employed. You want to take full advantage of those tax write-offs or ways that you report income. And that is not any judgment in the loan process, but we do need to document our way through it.
And that's the big reason for the portals. We don't just say portal, it's a secure portal. We understand this is very sensitive data we're asking for. So we are giving you a secure method to share that. If you're still not comfortable with it, there are other ways to share it. Jerry, along those lines, it's funny, some of the tools are filling the gap on this, but when someone is going to provide the information, how should they do that? Can they just, we have these neat phones in our pockets. Can they go there and can they, in a dark room from an angle like this, over their shoulder, snap pictures of the documents and send them to you? Or do we have technology to help with this?
Well, what's funny is that even the phones themselves will actually have tools to allow you to scan documents now. You know, when it comes to your, let's just say an iPhone, you go into your notes and you can actually scan documents and scan them in sets versus having to do individual pictures of a particular document. And when you do that, it actually lets you go page by page, scan until you're done. And then you get to close out that document and actually title it. So you actually get that whole process gone in one spot, and then ultimately just drop them into that secure portal. And ultimately, like I tell most people, it's like you utilize the tools that are available to you. And for us, a lot of times it's the more secure methods are, you know, I would say for some of the older generation, they're going to be a little bit harder to maneuver through, but it's for their best. It's in their best interest, because at the end of the day, we've seen how many data breaches have already occurred in the last few years. The last thing you need is to have somebody email you something because they found it just easier. They didn't want to access it, or it was too much trouble to access the portal. let's be honest, at the end of the day, I would rather you drop it into a Google Drive, a OneDrive, a whatever, like a Dropbox, something that's secured. That way you can just send me the link and I'll pull it from there, right? I would rather you do that than utilize email and try to send me documents that way, because they can be intercepted. At the end of the day, do you want to have your information be part of something that gets picked up on a data breach? No. So utilizing the tools that are available on your phone, there's Handy Scan, there's Adobe Scan, there's like I said, the iPhone itself will do a scan of a document.
Google Drive on Android or
Yeah.
Apple will do it. If you open
We'll do
up
it as
Google,
well.
push the little add a document, and it'll ask you to pull up the camera and scan.
Yep. And they're great, because at the end of the day, even if you have poor lighting, a lot of times it'll still auto adjust the image quality and light, and still allow you to have a really solid copy of a particular document. Versus, unfortunately, some of the pictures that we probably got so accustomed to receiving a lot of times and having to request over and over, be like, oh yeah, I sent you my paycheck. It's like, well, you kind of did. You kind of sent me like a halfway, 3/4 of the way angled pay stub that was kind of cut off like halfway through, but then kind of not. So we can't puzzle piece it together. We kind of actually have to have a full visual. And so sometimes that's the hardest part to have people understand, is like, hey, we want to help you as much as you want to get this home going. Like, we need you to comply with filling out the or not filling out, but providing the proper documentation in a way that we can actually utilize it. And so those tools really come in handy and really become something that you can actually keep for future instances. It's not something that it's just the right now. They actually serve a purpose. They go well with other signing documents and like Adobe just has a whole plethora of functions within it, which is you can scan it, you can send PDFs, you can save PDFs in your cloud, you can use Adobe Sign and do all that stuff. So it gives you full functionality and ability to really do a lot of the things that you would need to do just from your phone. Yes, they're available on your computer, but they're mainly available on your phone.
Let's talk about that. That's one of the things that, depending on your job, like if I'm a truck driver, I probably don't come across DocuSign in my daily life. DocuSign, Zip Form, HelloSign, whatever it is. Gary, why don't you walk through why it's important on both sides, but it's almost more important on the real estate side. You're going to be getting large sets of documents that need signatures in very specific places. So again, I'm an old man. I've done this since the 90s. In the 90s, you would say, hey, we sent you an overnight package with 35 pages of disclosures, and we marked with the little stickers where you need to go through and sign. So maybe walk through why we have a much better solution now, what to expect if you're not familiar with some of the online signing systems.
Yeah, absolutely. And time is of the essence, right? That's one of the things that's important too, is that time is so important. You have timing at the very beginning. If you're going out, you see a house, like, I want to buy that house. And they're like, okay, great. Your agent needs to go back, write up the offer for you, connect with your loan officer, making sure that everything is good in a package for pre-approval, so that you really get a solid offer to be considered and put you in the best light. And a lot of times from a real estate side, when are you going to look at houses? Well, you might stop by after work if you have a minute. You're going on Saturday and Sunday, and now it's, we're going to go look at these homes, and then we need to go take the kids to softball after that or volleyball, or we have, church on Sunday morning. We have, all these different wonderful things that we're involved with, and your professionals, they're working, trying to get things over to you. But I've literally, and people sometimes don't believe it until it happens, but I'm like, look, you may miss out on this home if we don't get this purchase agreement offer signed right now, because if somebody else comes in and that seller's ready to move because they have a job transfer coming up, or they have some other reason that they have to get out of Dodge and move on to the next chapter of their life, if another solid offer comes in, they're going to accept it. And so with that being said, we need to be prepared for that. So how are we prepared for that? That's asking the real estate professionals that you're working with, what type of electronic signature program do you use? Do you use DocuSign? Do you use ZipLogic? Do you use eSign? Those are probably the three most common ones that we use in the industry, but somebody may use, an internal one from one of their other programs that they use. And so it's important to ask. And then if you said, I don't know what that is, then follow it up with, I don't know what that is. Can you help me set that up on my phone? And then that way you have it on your phone, so that if you find yourself in that situation where you fall in love with the house, but you've got to get down to your grandmother's 90th birthday and you can't go home and sit at your computer, you're ready to go on your phone where you can review the document and you can sign it. So I like to meet with clients and to make sure that we're dialed in day one and say, are you familiar with DocuSign? Are you familiar with eSign? Are you familiar with ZipLogic, whatever one that we're going to be using? And when they say no, then, okay, let's set up an account. Let's do a test right now, make sure it works. This is how it's going to work, because you're going to end up getting another 50 of these before we're done.
On the rare occasion when I get anyone complain or say, I don't like this, I say, well, again, back in the 90s, if we want to, we could go back where you go to the realtor's office, sit in the conference room with one of these crazy triplicate forms where they have to stick the sheet in between there to make sure that they write hard enough with the pen, and you get a copy, and then a copy gets faxed. The carbon copy, they're going to fax it over. They're going to fax your offer over, and about 2 of the 8 pages are going to go through. So for all those reasons, these are awesome tools. And for those of you that deal with them all day, every day at work, you're like, what are you crazy people talking about? It's just a matter of life. A lot of jobs, a lot of industries, a lot of people just don't come across that. We did have another good question here. Candula Sarisha says, what are the tax benefits from buying a home in California? Now, all 4 of us operate out of California, can answer this pretty well. And this is really a nationwide question. It's not so much specific to California, but Tina, do you have an idea on what a quick summation of the tax benefits of buying a home?
Yeah, I would say this, that first of all, we're not tax professionals, so we don't give tax advice, but I would say you can talk with someone, because people kind of generally are falling into buckets now that we have this general deduction amount. So it's really not so much the question anymore of is there or is there not a tax benefit for buying a home in California? I would rephrase that question and really say, what is the cost of renting over buying? Because taxes are one component of that, but you may be discounting equity paid, security and home payment, anticipated rent appreciation. If you wait to buy and you buy at a future point in time, when we do have a really strong idea that houses are going to be more expensive, your tax burden at a future point in time is going to be greater. So really, to me, it's not so much anymore because of the change in the tax code and the way that deductions are taken, whether you are a standard deduction or you itemize. That's the only difference. That standardized deduction makes an assumption that covers the amount of mortgage interest that you would have written off in one lump. If you are falling above that and you are needing to itemize, you're going to account for that differently. But to me, the tax benefit of home ownership in California is not so much the question. It's a whole bunch of different questions, and even those vary within California as to where you're buying. But I would maybe reframe that, because we as loan officers do have reports, I think it was Candula, that we can help provide you with for your zip code that tell you what is the cost of renting versus buying. And I will be very honest with you, buying right now has been a longer term proposition than it had been in the past because of rates and home costs. And so we're seeing that you need to be anticipating that you're going to be in that home for about 7 years, 9 years, in order to outweigh the benefit of buying versus renting. But there's a lot of complexity in that. Like in my area, Ventura County, a lot of what's available for rentals are luxury rentals. So it's like, why are you going to rent something that's the equivalent of buying? Because there's not really anything that's available that's less expensive than buying. So this is where having a conversation with your loan officer is super important. And I would encourage you to kind of broaden what you're looking at beyond just the tax benefit, because there's a lot of nuance that's going to depend on your situation, how long you're going to be there. Are you doing it because your kids want to go to a school? There's a lot of things that a really good loan officer is going to look at, and that's one of the things. But there's a lot of other things that we can share with you that might help you make a decision as to whether homeownership today is right for you or not now or in the future or whatever. But with more data, you can make, I think, a better educated decision for yourself.
Perfect. So we talked about using the portal. Your lender is going to want you to complete your loan application, upload your documentation. One of the things that part of that application, you're most likely to be authorizing a credit report. We have some tech tools here that buyers probably never, ever, ever think of, but you're going to wish you had thought of them if you don't utilize them before having any lender pull your credit. Jerry, you want to walk us through what the do not call list, opt-out pre-screen are, and that DMA choice, and why someone would probably choose to opt out before having someone pull their credit?
For sure. And this is actually a conversation I have every single time I speak with a consumer. I like to have everything in one place, so I use a link tree. Link tree is probably the best thing that any professional should probably have to share these links, just because your opt-out pre-screen is there for you to not be able to get solicited through mail, email, and through even text. So it eliminates you to get a large, and I won't say all of them because it doesn't eliminate everybody's access to your information, because at some point there is storage of information or data out there that gets sold and shared, and ultimately that stuff still comes up here and there. But when you do an opt-out pre-screen, it will remove you from being able to be sold off freely with updated information on the current market. And generally that's done within the credit bureaus. The other one with the do not call registry is another one. It takes a few days to take full effect, and even then it doesn't eliminate everyone from being able to call you, because there is a window of time that these companies have in order to actually forcefully be removed off that list. And so a lot of times I tell everyone, hey, if you're just now starting the process but you're not expecting to buy until a few months from now, just do it now. Make sure you submit that request now and eliminate your number from as many of those places that come through, because I can't tell you how many applicants I've had that they'll put in their application. As soon as they pull their credit, it's a bombardment of calls, and then they'll be like, I already have like 20 missed calls from lenders.
Like 20, like you're not kidding, Jerry, like 20 to 25 calls before you get off the current call. It's blown up like
and
that.
It's insane that the credit bureaus actually sell your information in this fashion, and ultimately, there's really nothing you can do about it other than pick up the phone and just say, hey, I'm on the do not call registry, do not call me. Right? You can do that, but again, they have a time frame to be able to adjust to that, and so the best thing you can do is ignore those that do come through, and so eliminating that is a big step.
You know what really just kind of came to me right now is a lot of what we've talked about, whether it's any of these things, was you have to be careful as a consumer that if you're getting information for free, you're likely being aggregated into a lead or a revenue source for the person that's giving you that information. So you need to be really careful, because I've heard such a theme of what we've given for advice tonight, and it all boiled down to be careful because your information is being sold. Be careful, your information is being sold. Be careful, your information is being sold. I think consumers need to realize too that they're on the other end of the information being sold is a loan originator, a solar company, a home improvement company that is buying your information. And the reason why they are buying the information is because they don't work off of reputation, referral. How they get to you is the opposite of how a lot of us work, which is why I think we need to connect the dots for people to explain When you don't, and you are consumerized that way, it's you not making a choice. You don't know if the information is true. There's no way to like confirm or validate what you're being told is accurate. And much of this business is built on trust, unfortunately. So when you are being commodified as a lead and that person is buying your information, you should be suspect that their business model has a foundation for doing business that way, because that's not the way most of us do business.
Well, not only the way most people do business, I just think of it in this way. If you go back in time, where is a theme for tonight? Josh is old. Back in the 90s, there was it wasn't so easy to find a mortgage person, and you would have people come across you and they're like 2 days from closing and they're like, oh, I'm getting a 12% interest rate. They're like, rates are 8%. Why are you paying 12? They're 8%. They had no way of knowing. We all have a Google machine in our pocket right here. Like you can find, Google My Business of 20 local lenders and see 100 reviews for each of them of how they worked with other people. You absolutely shop for your mortgage, but you be in control of that process, whether it's going to LendingTree and putting your information and them selling it to 5 advertisers, whether it's going to Bankrate and plugging in your information to get quotes and 10 people calling you, whether it's just not being in that opt-out pre-screen and I pull your credit and you have 30 to 40 to 50. You guys think I'm kidding, but I actually have screenshots. I meant to pull it up before. And I have a screenshot that went like this long from a borrower of call after call after call after call within about 3 hours of pulling the credit report. And oftentimes they'll ask us and they'll say, what did you do? Who did you sell my information? Like, you think that I wanted you to be bombarded immediately after sharing information with me? That's just not the case. So
we're not even done with our call, by the way. We're not even done with our call yet. You're already getting bombarded with 50 calls. It's not.
I think something that's important just for our community to know too is that every one of us as vetted VA professionals, we very much are here for the consumer. Like we're here for your advocacy. And there's a lot of behind the scene things that happen that we don't really talk about in the vetted VA group per se, but I'm going to give him a shout out. But like Brendan McKay, he is spearheading trying to get trigger leads to go away and to be illegal. He himself is going to DC. He's meeting with people in Congress. He's putting things together. So we're active trying to see how can we make this industry better for the people that we serve. And that's one of the reasons I think each of us are probably a part of it at VA, is because we see that. We're like, how do we make life better for the people that we're serving here? And then one other just kind of quick thing, because I was like, oh, we forgot the most simple, in my opinion, of everything on technology. Make sure that you give us a good email address for you when you do connect, because we're so used to giving fake email addresses to when we're signing up for cards at Target and all these other places. We're like, oh, that's my junk email. And I'm sure we get those too sometimes as professionals. I'm like, well, we sent you the emails that you need for your documents or for this or for that. I never got it. And then like, can I verify your email? And they're like, oh yeah, sorry, that's my fake one. Or that's my junk email. So make sure that we're getting good contact info for you.
Gary, you'll like this. I have a loan. The docs are going out tomorrow. That lead came in online, connect the guy with the guy, found him online. I said, getting ready to send him the portal invitation. And I said, do you want me to replace the spammy junkalot@gmail.com with a different email address? He goes, oh, no, that's a good one. I'll find you in there. I'm offended. I feel bad that you want me to go to the spammy junkalot email. I'm in the bad one. I want to get to the friends list. And he was not having any part of it. So actually, I want to give everyone a chance to kind of give their last 2 cents. We're at 54 minutes here, and we tried to keep these to an hour, but Kandula has another question here, and I'd love to hear everyone's opinion on this. How many mortgage options do I need to compare? Someone asked you that question, Tina. What's your advice?
I would say compare 2. I think that it starts getting confusing, and I would say choose a larger lender and choose a smaller brokerage, because it gives you a taste for how they work, what the costs are. I think that when you're comparing, you need to compare on the same day so that you get an apples to apples comparison. And I would say that you're going to get a feel for the person and a feel for how they work and why they work and what to expect by working with them. And the reason why I say that is because it depends on the circumstances, right? We're talking to people typically using a VA loan. But what if this client who came to me as a VA loan client at the beginning is on a fairly long home search, and it ends up being that in the long run, we end up with a house that we place a conventional offer on instead of a VA offer for whatever reason? It's difficult to go back then and price shop this difference. It's better to kind of price shop up front, commit to a lender, and then go through the process knowing that you have built a relationship and confidence with person, because prices shift every day, but we're usually getting our money out of the same pot of money. So once you establish that initial difference between lenders, I think you can confidently go forward. That's not to say that you should blindly go forward, but as long as the communication is clear and transparent, and it just depends on everyone's journey. Some people I'm working with for years in advance, and we are working multiple loan transactions where we're giving quotes or we're not getting offers accepted or whatever. Other people are one and done, right? Those are different burdens to do comparisons. If the person on a very long journey with lots of offers was doing a fine-tune price comparison every single time, that's an exhaustive home search. If it's somebody that's we're only looking at one or two, then yeah, I would keep two lenders in my back pocket, and I would make sure that I had confidence in the lender that I was working with was getting me fair and accurate quotes and information. That's how I would do it.
You guys agree?
Yeah. So in my eyes, it's always, I would always say, just check with two or three. Again, there's different types of banks. There are different types of lenders, right? So we're talking about, you have your retail lenders, you have the big banks, you got mortgage brokers, and then there's a plethora of options out there. And so what you want to do is just go basically get a quote on the same day, like Tina said, same day, same hour, and make sure that it's just somebody that you're comfortable with. I mean, more than anything, I think it's that.
Yep.
Make it somebody that you're comfortable with, that you feel like you can openly talk to and feel comfort in that conversation, that you're getting actually taken care of and addressed, versus you just becoming somebody else's digits, right? You're not just a lead, right? You are more than that. And so you should be treated as more than that. You have a particular circumstance. You're a very different person from the last person. So ultimately, I need to accommodate to you. And so find that person that's going to come at you in a sense of like, I'm a real human being, not just another number. And I think that at the end of the day, that's what it's going to come down to. Because you can go with the cheapest person out there, but it doesn't always mean that that's the best person for you, right? At the end of the day, you can budget shop all you want. You want to go ahead and buy something high quality. You go to a large, I would say a department store or something, depending on what you're trying to purchase. Or I mean, you can go ahead and buy something off Temu. I mean, it's up to you. Right. That's the same thing when you're working with lenders. You want to go with the budget broker. Hey, that's okay. You can go with the budget broker, or you can go with somebody who's actually going to have that time and ability to understand and help you and drive you through that transaction as best as possible. Because at the end of the day, it's more than just a transaction. It's your home. And so that to me, that's it.
Jerry, I think too, to that point is when you're a home shopper, like you're not buying like home after home after home. You don't know that you got not the greatest lender because they gave you a great interest rate on the front end, or you think you're getting a deal on the front end. And guess what? They can't close on time. And then you had to extend your rate lock. And then you had to give up a seller concession. And then you had to whatever. It's the reason why real estate agents like Gary prefer knowing who the lender is, knowing some confidence in that lender.
It has domino effects.
Because, well, and ultimately, the lender is the biggest variable in the transaction. Am I right? It really is. And so if you don't have confidence, that lower mortgage that you were offered may mean that you pay more for the house, or you don't get the house you want.
There's no way to say this. We all do loans, all four of us. So there's no way to say this without it sounding self-serving. But I can tell you The people who tell me, "Oh, I got a much better quote," it's just, I really like you, I've got to go with this other person, it's such a good quote. Those are the ones that are more likely to call back 2 weeks into the transaction. Hey, they didn't lock my rate on time. Hey, everything's changed. They don't return my calls. We lost out on a house because they wouldn't do a pre-approval letter. And say, you called 9 lenders and you went with the one who was the outlier to everyone else. So it's very important. So back to answering this question, I think what we're all saying here, the answer is more than one. The people that absolutely are prone to getting led astray is they didn't talk to more than one. So talk to at least 2. And if you talk to more than 3, you're probably just going to confuse yourself. So like Jerry said, 2 to 3, make sure they're different channels. You don't go to 3 different big banks. You don't go to 3 different brokers. You don't go to 3 credit unions. You're kind of checking a few different options there from that end. So with that, we've already blown through an hour. We're going long-winded tonight. So I'm going to give everyone the sort of technology wrap up 1 minute speed round. So Tina, what is your last bits of advice, technology or otherwise, to buyers in spring of 2024?
Work with a mortgage broker that gives you numbers side by side. I use Mortgage Coach. It's just a name brand. There's other ways to do this, but make sure that as you are going out and looking at your house, that you have a relationship with your mortgage broker. So for my clients, I give you the cost of that house before you're going to go look at it. So if you're going to go to 5 open houses with your agent this weekend, I want you to open up that door and say, okay, this house costs $2,500. The next house costs $2,750. The next one is $2,628 per month. I want you to associate a payment per month with the house that you're going to look at before you go look at it, so that you can start establishing some give and take for value over what you're getting out of it.
And it's shocking how rare that is.
Yes.
Jerry, what do you got?
Well, I'm going to go just totally just sticking to the technology part. Something that I feel like helped me when I was moving is knowing your area. And so a lot of times I would use the Ring app, right? I would put the addresses of the properties that I was considering. And what happens is that you get a full detailed list of like all the stuff that's going on in that area. And you start getting an idea of what the hotspots are and whether or not you're living in one. So that just to kind of stick to that, like, yeah, that is definitely something that I would recommend as a person, to make sure that you're moving into an area that's safe and sound for you and your family. But ultimately, yeah, again, working with somebody that you can trust is going to be the I would say the biggest key factor there. And they're going to guide you and help you, especially if you're talking to somebody in this group. I wouldn't second guess a single person in this group here, just because I know what we've all been through. I know what we all do on a daily basis when we answer your questions. We're here for you. And just like Gary said, we're here to advocate for you and your needs and your benefits. It's not about us. So, at the end of the day, it stays that way.
All right, Gary, you get the last word.
Ooh. My best parting advice would be, there's no reason in 2024 for you to move forward with any decision if you're feeling ill-informed. Myself, the other people on this call, we have so many resources available to be able to communicate in different ways, to be able to get you the information that you may need, so that you can really feel that you're making an informed decision, whether it be on your mortgage or on the purchase of a specific home. That it should never be a concern for you of, can I ask this question? Should I not? I don't really understand that. Please, ask us the questions. Ask us to walk you through things. Ask us how to set up your technology if you need help with that. That's what we're here for. There shouldn't be any embarrassment. And a lot of times I see that in clients. We do this every day, and we have the opportunity to be exposed to all these things every day. But if we were to come to your job, we would probably not know where to start. But for some reason we think, oh, well, everyone's lived in a house at some point. Well, yes, but that's very different than buying or selling a house. So please ask us those questions and allow us to give you full information so you can make informed decisions. And that might be something that you would also take when you're interviewing different professionals, that if you're not feeling like I don't know if my question was answered all the way, or if they really gave me enough information to make an informed decision. Maybe that might be kind of the litmus test of maybe I should interview a couple more people before I make that decision. And even see if the humility is there to say, I don't know that. That's actually the first time I've been asked that question. Let me find out. And we do that with each other. We'll reach out to people in Vetted VA and say, hey, I haven't ran into this yet. What are some thoughts on this? But, the people that are really there for they're going to have a strong network to back them up, because we care for the people that we serve. So ask those questions and feel comfortable before you make any decision.
After I said you get the last word, Gary, then I remembered I had 2 quick tips. One of them actually piggybacks off yours. Ask your mortgage professional and ask your realtor, what are the 1 or 2 pieces of technology or tools that they wish their customers knew of and used throughout the process? We just went through like 20, 25 different things. Don't feel like you have to use or master all of them, but ask your realtor, ask your mortgage professional, 1 or 2 that are essential to the process to making it better for you. This one's a personal one. Some people are not like I am. I was into David Allen's Getting Things Done. Merlin Mann went 43 folders on that. You got Tiago Forte with the PARA method, but we have awesome tools. When you are out shopping for a home, oftentimes you're going to look at 10, 15, 20, 50 houses. You're going to write 3, 4, 5, 6 offers. Make a full folder in Google Drive. Make a Apple Note that has all of your details. What did I like about this? What did I not like about this? What did I hate about this? What are my must-haves? What are my must-not-haves? Anything you can think of. And if it's appropriate, share it with your realtor. Share it with your lender. Keep notes of everything going through the process. Keep it in our wonderful little pocket computers, and it will help you have a much better process here. So again, thank you for joining us here on Vetted VA Live. We'll be back with another crew of experts next Tuesday. Tina, Jerry, Gary, appreciate you guys being here and sharing your expertise. If you have questions, come back next week. We'll be covering another topic with another set of pros. Have a great week, everybody.
Josh, real quick before we hop off.
Sure.
We forgot to mention to go to vettedva.com, because we have so many great resources there for our community, and to utilize the Facebook. We're talking about technology. And I was like, wait, if you haven't been to the website, there's so many free resources there and courses and everything else. It's all free. It's all for you all, and utilize the group to continue to ask us questions too. But how that skipped my mind, I don't know. But vettedva.com and our Facebook group are probably 2 things to use for technology.
And if you're watching this in the Facebook group, do us a favor and go out to YouTube and find youtube.com/@VettedVA. And we have a very unknown YouTube channel there that actually has really good content. On Wednesdays, there's a market update that Hammer does, has one expert on. They break things down, let you know what's happening in interest rates in the mortgage markets. Lots of other content, some shorter videos there. So if you're watching this in the Facebook group, check it out, YouTube. If you're watching this somewhere on YouTube, you didn't know there is a Facebook group, check out the Facebook group. They're literally 24 hours a day, 7 days a week, 365 days a year, moderators just like us there to answer your questions about mortgage and real estate related to using your VA benefit. So this time we're really out. But Gary, that was a good call. It's a good catch, reminding of the best and most important technology for VA borrowers. All right, guys, thanks for joining me.